Hey everyone, welcome back to Corporate Decoder, the place where we look at company documents and figure out if they are actually building a future or just selling smoke and mirrors. Today, we're digging into Nukkleus Incorporated's latest report, and let's just say this one involves flying machines and a bit of a deal. Before we dive in, if you love getting these no-nonsense breakdowns of what companies are really up to, make sure you are subscribed. And for even more behind-the-scenes chats and to connect with fellow corporate sleuths, join our Discord community linked in the description below. So, Nukkleus Inc, or Nuck as you might see on the stock market, has filed a report about a pretty significant move they made. It looks like on the 15th of January of 2026, they bought out another company called Nimbus Drones Technologies and Marketing Limited now. Nimbus sounds pretty cool. They're an Israeli company started just in 2024. And they specialize in these professional unmanned aerial systems, which basically means they make advanced drones for serious jobs. Think critical industries, professional applications, that kind of stuff. This acquisition is a big deal for Nukkleus. They are essentially buying into the aerospace robotics world, focusing on drones. For the purchase, Nukkleus paid by issuing restricted shares of their own common stock and a convertible note. That note is for $3,250,000. It is for 24 months. And it carries an interest rate of 6%. The person who sold Nimbus gets to convert this note into Nukkleus stock at a fixed price of $2 per share. There is also a clause that stops the seller from owning more than 4.99% of Nukkleus's stock through this conversion, which is a common way to prevent a big shareholder from suddenly taking over or massively diluting others. This entire deal, including the shares and the convertible note, was done without a public registration. They are relying on an exemption from registration rules, specifically Section 4 Add 2 of the Securities Act and Rule 506 of Regulation D. This means they believe the seller is a sophisticated investor who doesn't need the usual protections of a public offering. The shares they issued are considered restricted securities, meaning they can't just be resolved easily. It is worth noting that Nukkleus Inc has its common stock traded under the symbol NUK, and they also have warrants going by Nukkal. These are both listed on the Nasdaq stock market. They've also indicated they are an emerging growth company, which gives them some flexibility with reporting rules. And they have elected not to use the extended transition period for new accounting standards. The company also put out a press release on the 16th of January, the day after this report was filed, formally announcing the acquisition of Nimbus. This press release is part of their public disclosure, making sure investors know about this material event. Now, let's talk about the juicy part for many of you watching. While this report doesn't contain detailed financial tables for the period of the acquisition itself, it does give us a glimpse into the company's structure and recent activities. The stock purchase agreement and the convertible note are important exhibits. The key financial element here is the $3,250,000 convertible note. This is a significant chunk of debt financing, but with the flexibility of conversion into equity, the 6% interest is a cost of capital and the conversion price of $2. Purse Hair tells us the seller's valuation expectations for Nukkleus. If Nukkleus's stock price rises significantly above $2, the seller has a strong incentive to convert, which would then dilute existing shareholders. The 4.99% cap on ownership is a protective measure against excessive dilution all at once. Looking at the bigger picture, Nukkleus is clearly making strategic moves to expand into new, potentially high-growth areas like drone technology. This acquisition of Nimbus drones seems like a calculated step to enter the unmanned aerial systems market. The company's strategy appears to be about acquiring specialized technology and expertise to drive future revenue. However, there are always things to watch out for. The reliance on a convertible note means potential future dilution for shareholders if the stock performs well. The amount of debt, although convertible, needs to be managed carefully. Also, the effectiveness of integrating Nimbus into Nukkleus operations will be crucial. Can they leverage Nimbus's technology and market position to generate substantial returns? That is the big question. In terms of the company's direction, Nukkleus is aiming for growth through acquisition in a cutting-edge sector. The strength here is the potential for innovation and market leadership in the drone space. A weakness could be the execution risk involved in integrating a new company and making sure the synergies they are expecting actually materialize. The opportunity is clearly in the expanding market for professional drone services. A risk would be competition in this space and regulatory hurdles that might emerge. Overall, this filing shows Nukkleus Inc. isn't standing still. They are actively pursuing growth by acquiring a company in the exciting drone technology sector. The financial structure of the deal, particularly the convertible note, introduces potential future dilution, but also provides a clear path for the seller to become a more integrated shareholder if the company performs well. Investors will be watching closely to see if this $3.25 million investment, combined with the stock issuance, pays off by propelling Nukkleus into a leadership position in the drone market. Alright, that is our breakdown of Nukkleus Inc.'s latest filing. What is your take on this drone acquisition and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more community insights. Thanks for watching. See you next time.